and go to Bitcoin straight away and have a look at what's going on. Oh my god. Just zoom in. Oh god, lots of stuff. All right. So there you go. Look, from yesterday, I had a short planned, had a long planned, and I didn't take either trade because I was traveling. I was flying from Berlin back to London. But as you can see, both of the trades worked. The short worked and so did the long. The price came down, took out these lows here, and it came right back up, and the price went up, took out this high here, and it came all the way down. So that was quite good. I was still looking for this lower long as well, but I would say that that wasn't unexpected. It wasn't unexpected. What do you think? It looks quite good. Now, we're still underneath the previous all-time high. Okay, so we've breached the previous all-time high once, twice, 3 times so far. The third time, it didn't actually take out the liquidity of the all-time high that was put in. As you see it, short centered here. They took profit as the price came down. And if I zoom in, let me get rid of these brush strokes now. With those. Get rid of these. Oh no, I'll just show you. So as the price came in, it took out the liquidity from this line, from this level, up. The price came down, short centered. They immediately took profit. That's what this was. This was a take profit. But at the same time, that was also a long entry because the lows here were taken. It's come back into the value area high. So not only did the shorts take profit here, the longs entered. Price whipped all the way back up to punish the early shorts if they set break even. But actually what happened was that it just kind of came back, reclaimed the golden pocket, lost the golden pocket. And so potentially there were 2 really good trades to be had yesterday, and they both would have executed, if executed correctly and if profit had been taken. They were very successful trades. As I said, I would have taken the trade, but I was flying. I was at the airport, so I didn't take those trades. It's never good to take a trade if you're not 100% focused on the trade. It's not good to be distracted when you're trading. Okay, I think that was quite interesting. Let me get rid of these now. And let's just have a look and have another fresh look at the charts and see what's going on. We had a daily candle close. Oh, it's a very strong close. Takes the liquidity from the highs, closes higher than the previous day high. It's a very strong close. The volume is good. Can the price reverse? Of course, the price can always reverse, but doesn't look like it's reversing. The shorts are literally getting destroyed at the moment. Anyone who shorted here has now been invalidated because the price went higher, and anyone who's shorted here, they could still be in shorts, but as you can see, if you shorted this swing failure, your invalidation is there and your position is under pressure. So unless the shorts who entered here took their profit in this push down, they will be under pressure to close. And that's really important. It's really important that when you are counter trend trading, that you take your profit very quickly and don't hesitate with that. And that naturally the trend is up, the trend is bullish, and so if you are looking to short, it's really important that you get the correct entry, the correct invalidation, and you take your profit at the first opportunity. If the trade turns from some kind of scalp into more of a swing, then on the back tests on the way down, you can always add to build your position after you've taken profit from the initial short. But you don't want to assume or presume that this is the top. We can't think like that, because the price action is just crazy bullish right now, and the price just keeps on, all the dips keep on getting bought up. And what you need for the price to go down is you need the longs to become trapped and to come under pressure to start closing out without reopening, or if they reopen, then they're put under pressure to close out to pull the price lower. That's what you need. Let me just pull this volume area now, update it. All right, what have we got? Let's have a look. This is the local value area. Let's see that is first time. 6R flip from lower down. That's the all-time high. We have a fixed range there. I'll get rid of that. What's that one? That was my alert. Okay, get rid of that now. Good morning. If you've joined me, tell me where you're from. Tell me who you are. All right, so point of control is now higher up. As you can see, it's moved all the way to there. This high volume node at the highs has now become basically the point of control, and now it's slightly higher. The value area high has moved all the way up to just underneath the previous all-time high, and the value area low has moved. So what's happening now in terms of the volume is that we're starting to put volume into these highs now. We're starting to put volume. We're still in the value area, and what's happening is the value area is moving with the price. That's pretty normal. It's not unexpected, because as you put in volume, that's going to change the value area. Okay, and that's what you kind of want to see. You do want to see the point of control to be lower down in the range. And quite simply because if the point of control is lower down, then the price can pull back and find support. Whereas now, because the point of control is quite high up in this higher range, if the price goes down, then actually the point of control can flip into resistance. So it's always better for the point of control to be lower if the price is moving up. But that can't always happen, because as the price is moving up, volume is coming in, and that's going to change the volume data. So you just got to be aware of that. And that, at the moment, the value area high is at the previous all-time high. It is acting as resistance, as you can see. The price has failed on the mid-term time frame, has failed to close above the previous all-time high. We've taken liquidity a couple of times from the previous all-time high, but we've failed to actually get above the previous all-time high and consolidate for continuation. We're failing to do that at the moment, so obviously it's going to be quite brutal if the price starts moving down, so we have to be aware of that. Let me have a look at these weekly time frame candles. It looks like we're having, I mean, the week hasn't ended, we've got 1.5 days to go. It looks like it could be forming a continuation candle, but it's never best to preempt the formation of candles quite until the candles actually close. So the weekly candle closes tomorrow night. You just have to pay attention to see what's happening on that candle. You can see that the volume is increasing, and as long as we don't get a rejection like a red candle underneath the previous candle weekly high, then it's okay. You know, that's kind of increasing volume, increasing prices. That's what you want to see. Look at the 3-day chart. The 3-day candle closes today. It looks like we're ranging in the previous 3-day candle wick. Are we going to get continuation? It's amazing how the volume is now coming here in the highs, you know. I don't know if people are joining late or if this is because the shorts are getting punished, but everyone wants to see increasing volume. Increasing volume is good. As long as we don't get a rejection, it's good. There's still that untapped daily level lower down here. I think I've marked that off. And then we've got this historic weekly level that's still causing the price to go up and down potentially, or maybe I'll just get rid of that now, I think, because we have a daily level there. So I could probably, let me have a look. Potentially could get rid of it. No, it's just been so washed that it might pretty much be irrelevant. You still have this SR flip, which I'll leave, and you have this daily level. Point of control. You've got that higher daily level, as that's been tapped now. In yesterday's price action, that was cleared, the liquidity has been cleared. And that's what's happening. What's happening is the liquidity is being cleared from the highs. And effectively, anyone who wants to short or has been shorting, it's coming to an end to the point that eventually the shorts won't enter. They'll be looking to short higher up. That's what's happening. What's happening is that as the price keeps on pushing and keeps on punishing the shorts, you'll get to a point where the shorts will stop shorting, and as long as the buy pressure continues, we'll probably get into a situation where we do end up, so we don't, the thing is that you don't want to lose support levels, and we're not losing support levels at the moment. We keep on putting in higher lows. This pivot here that was put in, you can see it's a higher low. As long as we keep on putting higher lows and we keep on holding support lines, the price action remains bullish price action, and there's no change at the moment. As long as this continues, then it looks quite healthy for continuation. Have a look at these trend lines. That's irrelevant now. Get rid of that one as well. So this range. Yep. So you see I had the 3-day wick candle high, and yesterday what happened was, after you had that swing failure, the price came back into the 3-day wick candle. You see, that was the range. It held the range. It was at the same level there, and that's where the price rejected. So probably what we want to see is the price to flip that into support for continuation. When you see that, that's going to be a good sign of continuation. And right now we're at the higher daily level, which has been washed, and we're just kind of loitering around this level right now. Point of control is still there in the highs. You see how the price actually, look, I don't know if you noticed this, but the price, after we rejected from the new but previous all-time high, which is there, the price sold off all the way down to the 3-day candle body high perfectly to the dollar, and then the price came up all the way up to the 3-day candle wick high. It looks like, to me, it looks like the 3-day candles are playing a very significant role in controlling the price and how the price moves. That's what it's looking like. And when you're looking at the previous price action, you see this 3-day candle, it came up, it couldn't close above that previous 3-day candle wick high, which was that. And you see how the price went down and it came back up. And so if we're not going to get a close above this high here and consolidate above the previous all-time high, the same thing could happen. You could get the same kind of behavior where the price will again go down to go back up. You could get exactly the same behavior to push up. You have to be aware of that potential price action that could play out. But there's no reason to get bearish right now. I can't see any kind of bearishness. The point of control is in the highs, and so you just have to be careful, because if you lose that, that could form resistance on the way down if there is a bit of a flush. And that's really what I think could happen. You could get another flush just to clear out the leverages before the price continues. And I think a lot of people are very concerned about that. And so possibly there's people who want a long who are very bullish, but they're just waiting. They're waiting for the flush to happen. They want to see the leverage flushed out before they take big long positions lower down. There's no reason that kind of behavior doesn't continue, because effectively that's how the exchanges are making all their money. They're making all their money by liquidating people. Right. Good morning, War. All right, so basically back to my previous idea. I think it's still in play. Let me just get rid of these lines now. Keep that. Rename that. Can't spell. Oh my god, I can't do anything. So, previous all-time high. I'll keep that line. What's that one? It's not SR flip. I can rename that as well, just to keep it. That's fine. It's the local volume range. That's fine. Keep that. And we can get rid of this fixed range. That daily level is important because we haven't tapped that level yet. point of control value very low. We have this lower monthly level, which is still relevant because we're still in the month. Then we have a higher time frame levels. That's fine. Looks okay. Just do some things and see. So there is potential. I mean, potentially we're coming into a little bit of a trend line here. Let's see how the price reacts. Potentially it could go up. And then I had this one earlier, but I'll redraw it to kind of make it less sharp. Actually, I don't really like it. I think this one would be better. I still prefer this one. And actually my target for this move are these two lines here. So let me just draw that out and put a little box there. Basically there. Call it a sell zone. That's kind of what I'm thinking. This lower trend line looks a little bit steep, but let's see. We're at potentially a good place to buy, but you know, anything can happen and you could buy and the price could do that. Stop you out. It looks a little bit steep to me. If it was like that, it would be a lot better, but let's see. Let's see how the price reacts off this. I am still thinking, and this is the thing, no one really knows what's going to happen in price discovery, and we are potentially in price discovery. We do need to get above the all-time high, the previous all-time high, and then we can potentially make a move up. Until we do that, we're still kind of range bound, and we're in this range, and we just have to leave the range, and then we need to potentially push up and see what happens, you know. And effectively what you want is you want exhaustion for the buyers, and we're not seeing that quite yet. If I get my exhaustion indicator out, we have some exhaustion levels that are printed on the 1 hour chart. You see these red lines, these are exhaustion levels. Let me have a look at the higher time frame. See, we are into a bit of an exhaustion level right now. As long as that exhaustion level holds, it is possible that we get a reversal. But if that exhaustion level flips into support, what could happen is you can get what happened here, where it flipped it into support and the price went up. Yeah, so those levels are market exhaustion levels, which are dynamic. They're printed on every time frame differently, but I can see now that there's a little bit of exhaustion happening at this higher range, and that doesn't mean the price is going to reverse it, but we could start seeing a local top if we do manage to push up a little bit. And I think that'll be a good place to look for shorts, like a little bit more swing shorts, slightly higher up. And then the way to know, let's see, when is Sunday? Let me mark off Sunday night. No. Go up, push up, push up. It may not even get this to this higher kind of, we don't know. Maybe actually it is a bit lower. Maybe it is something like that. And that will get people really bullish, because what will happen is they'll see that you know, this is the thing. People are going to be drawing these lines, and they're going to be going, oh my god, there's this line here. They'll be giving a lot of value to these lines where you connect these wicks, and so possibly you can get a situation where if the price does go up and then it pushes up, you get above there. Now you get people get bullish. They go, oh my god, this is really bullish. We've just flipped this arbitrary line into support, and then you get some kind of reversal pattern, and then you get a sell-off end of the week. Now that doesn't necessarily, again, this is the thing, this doesn't necessarily mean that the price is going to zero from here, but what you're looking for are areas of interest where those bigger players who have big longs in the lows of this move, this overall move from lower down, will be looking to hedge short at the right places, and they'll be looking to take big short positions where the price is finally exhausted. And that's what's happening now. So when you get a rejection here, these are big shorts entering. Rejection here, that's a big short entering, and what they're doing is they cover their longs, so they're leveraged long from lower down, and so they, on a separate account, they'll take big shorts, they'll take their profit, and so they'll be sitting in longs and shorts. And so because they're coming in at the extent of the ranges, and the ranges now being from the bear market low through to the all-time highs, they don't necessarily care if the price continues going up, because if it goes up, they've taken their profit on the short, they'll get stopped out, but they're still in their leverage long, and they'll just be looking to short again. And this behavior will continue and continue and continue until eventually the longs are exhausted, and then these leverage shorts will be sitting in big positions covering their longs lower down. Eventually what will happen in the future is that as the price goes much lower down, they'll start closing out their shorts, and they'll start increasing their leverage on their longs. So that's basically what's happening. That's the game that's being played. I can't see that crazy retail mania in this price action. That hasn't begun yet, and it may not begin until possibly in the future Bitcoin is reaching above 100,000 or more, because that would be FOMO, and that's what you need. You need FOMO for people to go crazy, and we're not seeing that just yet, because no one is FOMOing in, because we are at the all-time high, and no one is feeling like they've missed the boat. Now, if the price starts going up to 100,000 and starts pushing up, then people are going to start FOMOing in like crazy. All right, something to bear in mind. Does the price actually need to go down after it does that? Absolutely not. You could just come down, make a higher low somewhere down here, and it could just bounce back up and continue. Doesn't have to do this. This could just be another local top, and the price could just continue doing this until it just doesn't end, really. the key indication for a reversal in my mind is going to be some kind of higher time frame tail. Okay, so if I just close that off into and get rid of those, keep those. Right. So what I'm talking about is this. If you look at the weekly time frame, you see on the weekly time frame here at the previous all-time highs, it took a long time for the price to reverse. Here it took a good part of 2 months, and here it was just over a month. See that? And that's effectively what you're looking for an actual reversal. So if you look at the current price action, we've just entered it. It's like the first week, and it's just not going to do that. You're not going to just get that reversal suddenly. And if you look at this original price action, you can see that the first week the highs were taken 2 times, and then it was just ranging continuously for that period. It was a distribution period. We're not seeing that same price action right now yet, and the reason why I can tell you we're not seeing that is because I'm not seeing bearish CVD where you've got limit shorts, limit sells. You're not seeing that. And so potentially then the other thing you're looking for is something like this, and this is on the weekly time frame. You see here this price action here, this local top was put in. You can see this this doji set the scene for the price to finally reverse. Okay, we're not seeing that right now. When you compare that to our current price action, we're not seeing this. And this was in 2019, the local top. And even here, just before the COVID drop, you can clearly see that there was the price went up. Next week it was a red candle, then it was a green doji, and then the price reversed and it went to back test. So there was like about 4 weeks in that range between $10,000 and $9,000 where the price was reversing. And if you look at the current price action, we've only just entered this area of interest, and so there's no reason to think that the price is going to suddenly reverse suddenly. Like it doesn't really make sense. Because the way the price moves on the weekly time frame, you can see that every time we get some kind of reversal, whether it's to the upside or to the downside, you can see it doesn't just happen. There's weeks of reversal. There's weeks of reversal. Yeah. And effectively that's what you're looking for. You're looking for something similar where you have some kind of consolidation range over a few weeks before you can actually start to see what's happening on the higher time frame. That's what's going to drive the direction of the price, and we're either going to go up or down, and basically that's what's going to happen. But what I said wasn't invalid, and that is most of the time this is going to go on longer than most people think. Most people think or hope or whatever that the price is just suddenly going to reverse or it's going to go up, and probably not. Probably we're just going to continue doing this for an extended period of time. We are in a range. We're always in a range, and you can clearly see the moment we have, that's like our range, and we have a lower range there. We have like a range there, we have a range there. We're not in the lower range. We were rejected, and so we're now in this kind of higher range. And if it goes up, it'll just basically form another range, probably higher up, probably above the previous all-time high. If we do go up and we start ranging here, we could just be ranging there, and that could carry on for a while, and then you could get another flush down go back up, and it'll just be ranging again. And this could just continue for a while. It's kind of what's happening right now. There's nothing else that's happening. We're above support levels, we're making higher lows, you know, the price action looks bullish. The opportunities are the swing failures. So let me have a look at the opportunities now on the local time frame, and then I'll move on to some other things. Just come and see about that. It's lower down. I mean, I think this lower level here would be nice for a long. It would be much lower. So I think you'd only really take that if there was a flush of liquidity, a liquidation event. You'd have to wait for it to reverse. You wouldn't just jump into there. And probably the entry would be this swing failure of this pivot here. I'll just I've got an alert on there already, so that's fine. I don't need to put another alert because I've already got an alert there. We do get a flush of liquidity. You could easily take that trade for a long. Yeah, it would still be a higher low because this is your pivot low right now. After you've made this higher low, you've made a higher high. See that? So as long as the price now doesn't go and take out this pivot here, we're still in higher low territory. The higher low could come all the way down to here to make a higher low. As long as you don't take out that low, we're still in higher low territory. That would be a nice place to enter because you're coming into an SR flip. You're coming to a daily level. If you wouldn't just catch that, you would think about waiting for the price to come back above this previous level. If you get a back test, that would be great, and then you can long and you have an invalidation there. And if you get invalidated, you get invalidated, but that's why you only risk a small percentage. And then if it goes right back up to the all-time high, then you're looking at a really good trade, like a risk one, and you can get 4 potentially on that trade. As it comes into the point of control, you would take profit, because the price can always reverse at the point of control. I could always do that, and that's why you would take profit at the point of control. That's kind of the long idea that I'm thinking at the moment, which was the same idea I had yesterday. And I think for shorting, I mean, again, you could potentially short every high that's swing failured. That would be a good entry. If we don't get a failed auction, then you'll be looking to take the swing failure off that high there. Again, just keep on doing that. Let's set that down. SFP short BTC. There you go. And then the trade, the local trade, it's there. Don't know how high it could go, but the price action goes up. That's kind of what you're looking for. It doesn't have to be so prolonged. It would just be like an up and down, really. That's it. I can't see anything else. I would prefer a long. I prefer a long just simply because right now the longs are more profitable. The shorts are getting destroyed and the longs are enjoying life. All right,